Causes of depreciation. Wear and tear, assets become worn out through use. Obsolescence, assets have to be replaced because new, more efficient technology has been developed. Machines which were acquired for the production of particular goods are of no further use because the goods are no longer produced. Technological advance. Passage of time, an asset required for a limited period of time, i.e. the lease of premises for a given number of years, loses value as time passes. Depletion / using up / exhaustion, e.g. mines, quarries and oil wells depreciate as the minerals / resources are extracted from them. Economic reasons. Calculate depreciation using the reducing balance, straight line and revaluation methods. Net book value / written down value / carrying amount, the cost of a NCA minus the accumulated depreciation. Net book value equals minus straight-line depreciation, when the total depreciation is spread evenly over the useful life of the non-current asset. Straight-line depreciation equals minus y/% times. Reducing balance depreciation. Depreciation is calculated as a fixed percentage of the net book value of the asset each year. Reducing balance depreciation equals % times. Revaluation method of depreciation, used to calculate the cost of consumption in the accounting period of small NCA, i.e. power tools.